Welcome back everybody. Today we will speak about Facebook. We will start with how ad spending globally looks like. Then we will see how our biggest competitors in this space performing. And when I say biggest, I mean Amazon, Google and Facebook. We will see what are the differences between those, and then we will focus solely on Facebook. How does their revenue margins look like? Also, I will tell you a few sentences about capital expenditures. And at the end, I will even comment third quarter results which are coming later today. So you will basically get full package today about how Facebook has performed and how it is performing and how it will probably perform in the future. As you know, I was kinda bearish at the beginning of this year about Facebook, but I realized that I made a mistake and then I actually bought 20 stocks when they went down to 260 or 50. Before we move on, you can see here my portfolio. I actually yesterday lost more than $1,000 when we had that small market sell-off, or actually market meltdown. But today I am recovering a little bit. I also bought 100 shares of Dropbox yesterday. So I wasn't only looking what is going on, I was acting yesterday. But my cash position is still sitting at around $8,000. So I still feel comfortable going into the end of the year where we might see a lot of volatility. Year-to-date return is around 23-24% right now. But I'm thinking about making videos solely about how much money actually did I lose this month. So I will go more into details in some of the future video. But for now, let's move to Facebook. Here you can see numbers for digital ad spending all the way from 2017 to forecasts for next several years. As you can see here, we've seen a little bit of stagnation from 2019 to 2020, which is of course caused by coronavirus. But as we get used to living with this disease, everybody is expecting that for the next year we will see huge rebound in digital ad spending. So we can expect bright 20 and 21 for Google, Facebook, Amazon and other companies in this segment. Then after 2021 we can expect moderate growth in this sector. And bear in mind, even though we have tough competition in this segment, there are several huge companies like Amazon, Google and Facebook which are competing. But then we have a lot of smaller social media and other ad companies which are also competing for their part of this huge market. And when you have overall growth in this segment, I think that there is a lot of room for all of the competitors and that they will not cannibalize each other's results anytime soon. But even we do have market which is growing and market which can have several participants in it, they will not all perform on the same way, of course. For example, you can see this headline which went out before second quarter earnings, which says that Google's ad revenue to fall in 2020 as Amazon and Facebook continue to grow. And that actually happened. You can see here that ad revenue at Google were down compared to the same period last year. And that is actually the first time that Google saw revenue decline since their IPO. And Facebook in the same time grew its revenue 10% year on year. But then we come to Amazon, which actually grew ad revenue 41%. Remember, Amazon is not reporting ad revenue numbers separately. So we cannot be 100% sure how fast are they growing because they're reporting it at other revenues, which include its ad business but also some other businesses, but it is growing rapidly and the fastest on the market, which is actually expected because Amazon does have by far the lowest ad revenue numbers, so for them it is easiest to grow at higher pace. But why is this happening? Why is Google going down while Facebook is actually staying on its trajectory and Amazon is growing the fastest? Well, my personal opinion, and remember I am actually working in digital ad company, the most lucrative users for Google are users which are coming to their search engines and searching products which they want to buy. Because once they search something and they click on that URL on Google search platform, you can serve the most expensive ads to those users. And what are more and more people doing nowadays? They're going directly to Amazon.com and they're typing product which they want to buy on Amazon.com search. So they are not Googling it, but they are going to Amazon.com and they are searching for their product there. So Amazon is actually able now to serve ads and products to those users directly. And that is why Amazon is actually stealing market share from Google and not from Facebook. On this chart you can see how much revenue Facebook generated in the last few years. This is basically perfect chart where you can see clearly that trend is still going upward. It has slowed a little bit, but taking into consideration how big has Facebook become and taking into consideration that we have coronavirus distorting a lot of sectors in the economy, as a Facebook investors we all should be really satisfied with these results. On income from operations we can see different picture, because if we remove one-time items and if we remove fine that Facebook had to pay, we can see that compared to the last year in second quarter, income from operations actually decreased a little bit. Consequently, we can see the same trend on operating margins, and this is actually one thing that I will be watching closely. This is one of the most important things that I'm tracking at right now, because my personal opinion is that operating margins at Facebook have bottomed down. And if margins have bottomed down, we can expect that their net income outpace growth in revenue, which will probably substantially increase price of the Facebook stocks. Another really interesting thing that I will be closely monitoring are capital expenditures, because they are basically what is driving Facebook's operating margins. And you can see here that from 2018 to 2019, capital expenditures were growing moderately, but if we compare second quarter of 2019 with second quarter of 2020, we can see that capital expenditures actually went down compared to the same period last week. If this trend continues, I think we will really benefit on the long term in terms of rapid growth in net income. And another interesting chart which I would like to show you is this net income. Again, if we add to second quarter of 2019, find that Facebook had to pay, we can see moderate growth in net income, and I expect that in this quarter, even though a lot of analysts is expecting that their net income went down, I expect actually slight growth. In a few hours we will see how actually they performed in third quarter. But based on, for example, results of Snapchat, digital ad spending rapidly grew in third quarter compared to second quarter. And based on the results of the Facebook, we are obviously seeing strong demand for advertisement on Facebook's platforms. And at the current valuation, Facebook has PE of around 35. That is not cheap, but based on their balance sheet, on their net income growth, and based on the fact that they basically don't have a lot of competition, and that digital ad spending globally is growing rapidly and will grow in the future, I expect that Facebook will be able to grow its net income by 15 to 20% for at least 5 to 7 more years. And if you take into consideration all of this, paying PE of 35 for a company like this is reasonable price. Okay guys, I will take a small break. When I come back, hopefully Facebook will show us their third quarter results so we can check how did they do and so we can comment them together. Okay guys, earning results are out and they are magnificent. Facebook smashed expectations. Look at this. Revenue growth of 22%, unbelievable. I never expected to see revenue growth at such a high rate. Net income and EPS grew even faster. At the first, I thought that margins are expanding, but what happened is their tax rate is actually lower, but their operating margins are still trending down a little bit. If I had to pick one bad thing from third quarter results, that would be operating margins, but overall this is exceptional results. A few more things which I would like to emphasize is this: cash and cash equivalent went to more than $50 billion. Balance sheet is one of the best in the world. Headcount, they had more than 56,000 people employed, which is increased 32% year over year. So they are still increasing headcount faster than they are increasing revenue. That is small headwind, but of course they are not increasing it without a reason. They are investing in the future. And then there are a few more additional important things. For example, this one, we expect our fourth quarter 2020 year-over-year ad revenue growth rate to be higher than our reported third quarter 2020 rate. This is just unbelievable. I cannot understand how can they grow so fast, because they already are generating over $20 billion in revenue every single quarter, and they're still growing over 20% revenue year over year. That's just unbelievable. So they expect that their revenue growth rate in fourth quarter will surpass 22% year over year. That is just unbelievable. You've seen on my previous screenshot how much revenue they generated in last fourth quarter, and to outpace that by more than 20% is just unbelievable. Yeah, I'm really speechless. So they expect their total expenses for this year to be in range between 53 and 54 billion, and for the next year they expect it to be between 68 and 73 billion. So they will be spending a lot of money. It will yet to be seen on what exactly. And then again, capital expenditures for this year will be around $16 billion, and for the next year it will be between 21 and 23 billion. So again, they will be spending a lot of money, but they will be generating a lot of revenue, a lot of cash flow, and a lot of net income. Just exceptional quarterly result, and this really made me happy. Perhaps if management will give some negative comments later today, perhaps stock will go down, and if it goes down for any reason, I am really thinking about adding 10 more shares tomorrow or next week. This is just, they are unstoppable. Coronavirus, politics, whatever happens to them, they are growing and they are smashing expectations. They are firing on all cylinders. I feel that they are really unstoppable. Just a great company. I thought that this stock is a buy, but after these quarterly earnings, I am 100% sure that if you buy these stocks on a long run, of course nobody knows what will happen on a short term, but on the long run, you cannot lose money here.